So let's have some fun today and just take a simple look at what are the best Elliott Wave patterns to trade and what are the ones that are going to give you the highest probability of success and the one where you can make the most amount of gains. In my personal opinion, those waves are wave 3 and wave C. And the other ones are surely possible, and you can trade them. They're a little bit more risky and you have to be more experienced, and you just have to maybe have tighter stops, or just be more careful overall. But waves 3 and wave C are the ones that are the strongest. So as you know, a motive wave, which splits in two, an impulse and a diagonal, um, has 5 waves. And just a very simple basic layout of a 5-wave move is simple wave 1, you pull back in a wave 2, you go in 3, you do a 4 here, and then you go into a 5. So from this structure, the best wave to trade is going to be this wave right there. Now, how do you know that this wave is about to unfold? And how do you know that this is not going to be a 3-wave move, right? So, and even if it's a 3-wave move and it's not a 3rd wave, it could be a C wave. So all you got to look for is what precedes this wave. And a 5-wave move to the top side or to the downside is preceded by more than likely a corrective wave and an ABC move. So let's say that you are in a higher uptrend, or you're in an uptrend in the market, and then you see this correction. It goes A, B, and C. It should have been a little longer here, like that. Right? So this is your ABC move. This move is made out of 3 waves. So if you see a 3-wave move, you know that the next move up, it's more than likely it's going to be a 5-wave up. All right. At the minimum, if it's another 3-wave move up, let's say that it's a flat. So you go 3 and then you have another 3-wave move up. You're going to have an ABC going up. So at a minimum, you got to trade this lag that's here, either a 3rd wave, or it could be the 3rd leg of a correction. So if it's an ABC, it's probably going to be equal, and it's probably going to stop somewhere up here at about, or here at about 100%, but it's still a high probability move. All right. So how do you do this? So you find out, you look in the market and you see this type of a correction, and you see, I'm counting a 3-wave move. Now I'm waiting for a 1st wave up. And when I say that this wave, it's easier to trade than this wave, it's because you never know where this is going to end. Okay. And that's a risk where people try to pick bottoms and they say, well, it's over, it's over, it's over. And they trying to buy this and buy this. And the market turns around and, takes them out again and again and again until eventually you'll find a low, but maybe you'll be running out of money by then. So here's what you do. You wait for this wave to be over. And the way you know it's over is when you start having this 1st wave up here as an impulse wave. So this is wave 1 right there. And this wave has to have 5 waves within it. Sometimes after a strong move down, this 1st wave, it's going to be small. But you can still go, let's say, on a 45 or a 60-minute chart, and you can count a 5-wave subdivision. Okay, now you can keep searching for these waves even to a 5-minute chart. It could be a little crazier and you're going to get, chopped up a lot, but it's up to you what level of risk you want to take. But if you stay, from 60 minutes and higher, you might have a higher chance of identifying the waves properly. So you're looking at this and you say, okay, I got 5 waves. Now I'm expecting a correction. So now the 2nd wave is going to be your correction. So you're going to look inside this wave and see what happens. Is it going to be a flat? It's going to be a 335 coming down, or is it going to be a 535? So you're going to have inside this wave, you're going to have a 5-wave move, 3-wave move, and another 5-wave move down. And if you can identify that, then you know. And usually they retreat anywhere between 50, to 61, maybe to 78.6% of the 1st wave move up. So you identify that and you say the correction is over. You look for equality, you look for a fib zone, and then you got to pull the trigger. So now here is where it's important, right? You can pull the trigger when it reaches the fib zone or when you see that wave complete. But what if this does this and keeps going lower? All right. Now you're kind of screwed, because if you do that, if you get in, your stops have to be below this level right here. All right. And now you're wrong and you get out. But if you want to increase your chances of getting into a better trade, you have to wait for the first wave one up here. Okay. And then if this first wave one gets done, then you wait for the pullback in two, and then you trade that third of a third that's up there. All right. So that's why you got to be patient and take a look at the structures here. And some traders will be more risk averse. Some of them will be, they want to take more risk. So let's say, I'm going to wait, or I'm going to start buying a little bit here and a little bit lower until, this wave is done. And if it stops me out, so be it. At least I know what I'm doing. Others will just go for this wave one first, wait for the pullback into, and then trade a third of a third. That's how you trade this third wave. Okay. And then on the top side, you look for the projections. So you say, okay, this is wave one, and I'm looking for, let's say, 100% multiple of this wave. So you know that at least this wave that you're trading, being a third wave or being a C wave, it's going to be at least 100% of this move going up. And then let's say that you start with the two positions here. You might take one position at 100% and then let the other one run until 168% multiple of this first leg. All right. So the other option is, I said, it's wave C. So, you're in the correction and you know that, you're having a three-wave move to the downside. Let's say that this wave was five wave, 1, 2, 3, 4, and 5. That's kind of an awkward 5, but you get my point. So if this is a 5-wave move up, you're looking to trade a 3-wave correction. So you don't know if this is going to happen or not, but once you see this done in a wave A, and this could be a 5-wave move. If it's a 5-wave move coming down, you know this is going to be a zigzag, which is a 5, 3, 5. So after a 5-wave move, if you get a 5-wave move down, you look for the 3-wave correction, and then you enter. And then you're looking for the C leg down. And this leg is usually pretty massive, and it's pretty much equal to wave A in a zigzag. But this could also be a flat, so it could be a 3. If it's a 3, then you know you're going to get another 3-wave move up. So you're still going to get a 5-wave move down, because no matter what, the C wave, it's always going to be a 5-wave move to the downside. Okay, so that's why wave 3, especially third of a third, if you want to be safer, and wave C are the ones that are the best. First waves, I don't know. You don't know if this correction is over. It might keep going lower, so you're going to take a chance. Wave 5, those are pretty high probability as well, especially if you end up having, let's say that this is wave 4 here, especially that, if you have a triangle, right? So inside this wave 4, you can have A, B, C, D, E. I'm sorry. It's going to be A, B, C, D, E, and then you go up. Okay, so if you have this triangle in a wave 4 followed by this larger move, this is a wave 3. Okay, and let's say you missed it, right? So now you're waiting and you see that what's happening in wave 4, it's a triangle. Then you're looking for this final wave move up. But here is what happens. Depending on the structure of this third wave or the first wave or how long they are, you got to find out how long they are. You got to measure them. And then that kind of dictates how long this fifth wave is going to be. And sometimes it's a very short wave. So by the time you get in and by the time, you pay your commission and, you're scrambling to find a good entry and, whatnot, this wave could be very over very quickly and then you quickly reverse. Okay, that's why you see a lot of fake outs in a fifth wave coming from the fourth wave. All right, because sometimes in commodities, this wave can extend a lot and just be a very large wave. So you just take it step by step and you look at the internal structure of this fifth wave. But that's why fifth waves are a little bit riskier. Why? Because they are terminal waves. So when they terminate, they will terminate abruptly and then the market will reverse. Sometimes very fast. For example, if this, this wave 5 can be an ending diagonal. And if you're not careful, it would be very, very sharp, the reversal. And you got to be prepared to, take whatever profits you made and just get out of the trade. So that's why wave 1s and wave 5s are a little bit riskier. Wave 3 is where the meat is, and in wave C. All right, this nonsense here in wave 4, unless you're trading options and you're taking, butterflies, or you're doing iron condors and whatnot, those are good waves to trade in the options markets. And then wave 2s are again very risky because they happen after first wave, and again, you don't know the type of structure they're going to be. Sometimes what you get is you get running flats in wave 2. So you go, this is first wave 1, and then you go A, B, C. How you trade that? And then the market moves up into third wave. All right. So how crazy is that, right? This is the top of wave 1. It comes back in A. This is a B. So it fakes out everybody above here. It fakes up everybody below here, and then it moves up. So this is very tricky to trade. All right. This kind of running flats or expanded flats, and they are tricky. But usually, if you see this kind of a pattern, you will know that this third wave would be extremely aggressive, because after a running flat, the third wave is very aggressive. All right, so just a quick lesson on what are the best patterns to trade without charts, just with lines, and look to spot them. And maybe in some future videos we'll try to get some examples. But this is what I got. If you like the content, just give me some thumbs up. Maybe it raise up on the YouTube grading system, and leave some comments, and I'll talk to you guys later. Thanks. Bye.